And here we are on another beautiful Wednesday morning. My name is Justin Nimergood. I am the host of the Real Estate Rockstars. I am so thrilled to have guest David Little, principal and co-founder of Crown Capital Resources with us today. David is a principal, co-founder, and owner of Crown Capital Resources, a real estate private lender that helps flippers and other real estate investors achieve their goals with hard money loans. Originally an engineer, David discovered his passion for real estate and eventually found his niche in lending. For 8 years, he balanced his W-2 job, his growing lending business before fully transitioning in 2024. Since then, the company has experienced rapid growth, expanding from 8 million and to approximately $25 million in revenue today. David shares insights on moving from corporate to entrepreneurship, scaling Crown Capital Resources, the fundamentals of hard money lending, raising capital for real estate, and guiding newcomers into real estate finance. It's with further ado that I'd love to welcome David Little to the show. David, welcome.
I appreciate you having me on, Justin. Thank you.
Absolutely. So if you could just tell the guests a little bit about David. Who's David at a high level?
Sure, yeah, happy to. So my background is actually not in lending or real estate at all. I have a long background in both work history and education in engineering. I went to A&M and got my undergraduate and master's in petroleum engineering, and started my career with a pretty large E&P operator here in Texas.
Mm-hmm.
And I worked with them for approximately 15 years before ultimately leaving to pursue Crown Capital Resources full time. But yeah, the vast majority of my work history is engineering. I always had a passion for real estate. So even when I started my real estate job, as my W-2, I was constantly doing different real estate ventures, and I dabbled into a lot of little different pieces of that industry until I ultimately found lending, which was around 2007 mark, and just fell in love. I knew I loved real estate. As I tried things, I realized they weren't quite for me. As soon as me and my business partner did our first hard money loan, I thought, like, I really, really love this segment of the real estate industry. And so really for 2007, subsequently, all the way till I resigned from my engineering role, we just ran Crown Capital Resources as a nights and weekends job.
Wow.
We were running it at I got an hour lunch, or it's a little bit, I got an hour before work. I've got 3 hours after I get the kids down. I've got to work on the weekend. So really a passion project is how it started. And ultimately to be honest with you, it just grew to the point where we couldn't ignore it.
That's remarkable.
Yeah. Thank you.
Yeah. So often in entrepreneurship, you hear about these crazy stories of how people got started. And, some people definitely jump 2 feet, first, right? They leap before they look, if you will.
Yeah.
And then there's those that look before they leap. But I've always suggested that the best way to get started is absolutely on the side hustle, a lunchtime project, a couple hours after hours, so to speak. And it sounds like you're absolutely, in Crown Capital for that matter, a role model for those entrepreneurs and aspiring entrepreneurs out there, to kind of follow the model that you guys took. So on that note, you said it became something that you couldn't ignore anymore. Can you expand on that?
Yeah, so it made sense ultimately to leap from 2 perspectives. The first of which was financially. The income from Crown Capital had just slowly grown over an 8-year period. I mean, this is a long burn. But yeah, 2024 was the event where we were making more money in the side hustle than we were in our engineering jobs, right?
Okay.
So financially, it was like, okay, this is now something worth mentally exploring. But actually, even predating the financial aspect of it, there was another piece of me personally, as I was doing some kind of internal exploration and realizing what career path I wanted to pursue longer term. I really realized that being able to own my own small business was ultimately going to lead to what I valued the most. And after a lot of kind of internal study, and to put it another way, what I realized was the most valuable thing to me was just autonomy over my own time.
Yeah.
And I had the realization that well, you can have the most amazing corporate job in the world, like, and I did. I had a great one. I loved the people I was working with. I loved the project I was working on. The compensation package was really, really great, but all those things don't actually yield to what I was really wanting and seeking in a long-term career. And so that was a big realization I had personally. And I thought, owning the own business, it is absolutely a grind, and especially on the front end. But the reality is you can control your own time. And then even more importantly, so was the realization that as you move up in the corporate world, the control over your own time and your personal autonomy over your own time actually decreases as you move up in a corporation.
Yeah.
And if you do it right and you put processes in place in a small business, that can decrease over time. And so
Absolutely.
the longevity of what that could look like, maybe not today, but maybe 5 years from now, was very appealing to me as well.
Well, so let's stay on that note for a moment. What are some of those processes that you've already started to put in place today with your business as you look out? I know when we, jumped on here, you mentioned, having a family and all that had, to do with it. Could you just share with our listeners out there your scaling techniques, if you will?
Yeah. So admittedly, we're not the best at this. We're still actively working on it. One of the big changes that Jeremy and myself made this last year was we started implementing a lot of the processes from a book called Traction, which is, they refer to as an EOS, or an entrepreneurial operating system. And it's essentially putting the processes in place and systematizing them and then tracking them over time. And that was one thing that we had gotten really, really good at in this business is efficiency.
Mm-hmm.
And we had to do that in the early days because we just flat out did not have the time. So we systematized and automated as much of our business as we possibly could have. And in fact, today, just to put some numbers to it, I mean, today our fund size is roughly 25 million. We went ahead and hired a second hire. And with our team in place, which as of today is myself and Jeremy as principal and co-founders, and then we have two employees, Linda and Abby. And just with that team in place, we could scale today to $40 million in assets under management, or in notes funded, to put it another way. And that's only because we spent the time early on and put those systems in place and automated everything that we could in the business. I think that's super important to do early on. The second piece is a little bit harder, especially for myself. I like to have control over every aspect of the business. I like to be in the know on what's going on. And so as you move from a purely owner operated business to start having more employees working for you, you have to be able to give up control of certain aspects of the business. Because ultimately speaking, where you want to end as an owner is you want to, as they say, you want to work on the business, not in the business.
Absolutely.
Right. And so, we craft that. We do a lot of goal setting, Jeremy and myself, and our thematic goal for 2025 is Jeremy and I want to focus on vision, not on tasks. So we're actively working towards doing that, but it's hard.
Yeah.
I mean, admittedly, like, especially me, I'm an engineering background. Like, I like to be in the details on everything. But I know over time I'm going to have to, delegate those things and be okay with it.
Yeah, it's the founder's trap, right? It's the
That's
good
right. That's
old-fashioned
right.
founder's trap. So,
Yeah.
no, we appreciate you sharing though with the audience your techniques, which I know are appreciated, because a lot of our listeners out there, they either have started something and they're kind of dabbling with it, or they're thinking about starting something, or they're thinking about making a career shift, and they're not sure how to go about it. So I think your nuggets of wisdom are much appreciated. So let's talk about the real estate industry for a moment, if we can. It's a never changing industry, as you said at the onset of our podcast here today. And I'm just curious, what do you see as kind of the biggest challenges facing the industry today?
Yeah. So the base interest rates is kind of is kind of the tide in the real estate industry, right? It's like all boats rise or fall with the tide. And so what we're seeing right now, this is no surprise to anyone who's following the market, is we're just seeing a prolonged period of higher interest rates. And really over a shorter term period, call it, 6 to 18 months, what that really yields is the transactional velocity of the real estate market drops off immensely. And that's basically a fancy way of saying a whole lot less houses are generally transacting right now, right?
Yep.
And that does provide challenges to our clients, so the people who are out there flipping houses, because what we've seen this is a bit anecdotal, but what we've seen in our portfolio, which is across Texas, is that generally speaking, where 18 months ago properties were selling in 2 to 3 weeks, generally speaking, that might look like 2 to 3 months today.
Wow.
And so, yeah, it is substantially longer time on market is from what we're seeing, and that affects our clients such that they need to have more liquidity than maybe they were previously accounting for, right? Because every single month they've got to pay incremental property taxes, they've got to pay insurance, they've got to pay the interest payment due to us. So it does affect their bottom line, and actually, by extension, it actually affects the bottom line of Crown Capital, not in a dramatic fashion, but the reality is in our business is that we have several different revenue streams, but the biggest of which is our origination. So every time we originate a loan, we make 3%. So we as a servicing company are highly incentivized to do as many short-term loans as we can. And so on average, on a real estate loan, we originate for 6 months. So a year and a half ago, our average loan length was closer to 5 months. But now we're seeing our average loan length extend out to 7.5 months. And so you take that across 80 plus loans in your portfolio, and yeah, it does have a degradation towards your net income for the end of the year.
Yeah, fewer deals that you can amass in that amount of time because they're taking longer, essentially.
And the other thing I'd add is, what we have, another interesting phenomenon that we're seeing in the real estate market right now is there really is a segmentation between retail real estate right now and commercial real estate right now. And so a lot of the companies that are having issues aren't really the private lenders who are doing private loans to single family homes, things, in the $200,000 to $300,000 range. The GPs and the syndications that are having a lot of problems right now are the companies who went out and bought the 40 unit multifamily, and they were hoping to, get it reappraised, increase the net operating income, and then refinance it into a lower debt structure. And what they're seeing now is these balloon payments are coming up, and the appraisals are falling, the rent comps are falling, and the interest payments are staying where they were or slightly elevated to where they initiated the loan. So the commercial space is in a much more perilous position than the real estate space is. The real estate space I would characterize today as just generally slower. Yeah. We are seeing some increased inventory, but just slower. But the commercial space is different. And that's why strategically for us, we have underwriting protocols for real estate loans, and we have very different lending and underwriting protocols towards commercial loans. They are substantially more aggressive.
And is just to clarify, is real estate essentially residential in your world, or do you only service the true retail space, retail within commercial space?
Yeah, so I would say the segmentation in our business is as such. It's about 80% is residential. So on average, think single family homes that are being flipped in the $250,000 loan range.
Okay.
Right? So below median market value in Texas. And then our commercial aspect is anything from raw land or a commercial business building.
Okay. Got it. No, that's helpful to know how you're segmented and structured as a business. Tell our listeners out there, tell them a story, one of your favorite stories from, being in this business thus far. It could be a success story, or it could be a challenge story, whatever it might be. Could you just share with our listeners something that really resonated with you and that you hold near and dear to heart?
Yeah, I think For us, the commercial loans that we do are always really interesting. With the residential loans, they really are. It's just rinse, wash, repeat. It's kind
Okay.
of the same thing over and over. The commercial ones are funny though because uh, there's always a story.
Hmm.
And so one of my favorite ones that we did was a commercial loan out in a smaller town. I won't give too much away, but essentially, sometimes it's the people that make the difference more than anything else. So we gave a loan out to a business owner who actually also happened to be a pastor. And
Oh.
so the way we do our, and I'll backtrack just a bit. The way we do our commercial loans is um, we go out. A client will come to us and say, "Hey, I've got a commercial property that I own free and clear." Typically, we
Hmm.
go and we have it appraised, and then we give them 50% loan to value. And so, typically speaking, as an example, if the appraisal comes back at 2 million, we would say, "Hey, our loan amount to you is maximum going to be $1 million."
Sure.
Well, so anyways, this was at face value. This was just a regular vanilla loan. It was a I'm sorry, a commercial loan, and it was a building. But as we dug in a little bit more and we started getting some details, the appraisal came back. We realized that for this particular small town, it was more than just a commercial building. It was the vision was it was going to be a community center. And the
Uh,
guy wasn't just a business owner; he was a business owner and priest in this town, and
he was
and a
probably the
super key
main
member.
figurehead there, right? I mean, he was
Yeah,
probably
yeah.
the main guy there.
And it's a small Texas town, so everybody we spoke to in the process was all connected, right? So the insurance agent ended up being the mayor of the town. The title company ended up being the cousin. So it was a super connected loan. And what they were essentially doing is they were taking cash out of a property that they owned to continue to build out and grow this community center, because the vision for our borrower and some of the other community members that we actually spoke to during this process was like, hey, we want this to be a place for our city where people can come, where families can gather, in communion. We can have church services. And so it's neat, it's neat where we're able to, in these cases, provide the liquidity for these people to build out these sort of community centers.
Sure.
And it really does tie to our bigger mission in Crown Capital Resources, like a mission statement, right? So when we think about the why of a lot of what we do is we are providing funding to people who are going out and bettering communities, right?
Yeah.
We're going out to people who are taking houses that are no other bank would lend on, or they're unrenovated, unfinalized properties, and they're going and they're making them beautiful and for new families to move into. And so anyway, so that was kind of a neat story where the more we dug in, the more we kind of got to know these people and figured out the story. And it was just kind of a neat story knowing that the capital that we're providing is ultimately going to go towards the renovation and build out of this community center.
Yeah, that's gonna make y'all feel good. I mean,
Yeah.
it's one thing to do something and obviously to make your normal profit or whatever on your underwriting and origination, but it's another thing when you do something and it's that meaningful, not just even to an individual, but to an entire town. It sounds like, right? Like this
Yeah.
town
Yeah.
was probably had this vision for years, and finally it's coming to fruition, and you guys are at the forefront of it. So just kudos to you and to your team, and doing those type of deals that might not go on the board as the largest deal out there, but it's probably one of the most meaningful in its right.
Yeah. Yeah.
All right, so we're going to
Absolutely.
transition to kind of our final segment here, where I'm going to ask you some personal questions about
Yeah.
you in the future here. So let's say it's your 80th birthday, David. Who is there and what's going
Oh man. You said 80th, right?
80th, yes, sir.
Okay, okay, okay. Well, Lord willing, my wife, my daughters, my grandchildren, and depending on when they start having kids, maybe my great grandchildren.
Okay.
Um, but yeah, I mean, family to me is absolutely at the forefront of of my life, and it is actually one of the main drivers in me pursuing this path as a small business owner over working a W-2, right? Because when I said earlier, autonomy over my own time is what's important to me. That's not to sleep in or to go play more tennis, although I do love playing tennis, but it really is to maximize the amount of time that I can spend with my family in a meaningful way as well, right? And so and it can be, what I've learned is it can be really small things. Like on Monday of this week, my daughter had a presentation that an anatomy presentation that she had been working on for several weeks, and it was at 9 a.m. And so for me to go to that, it's like, absolutely, I'm going to be there. But again, in the corporate world, like, I can't guarantee that I could have been there. I would have maybe tried, but 9 a.m., especially on a Monday, there's a lot of operations meetings and things like that. So I mean, if I envision my life at 80 years old, it's surrounded by all the people that I love and that love me, right? Because that to me is like that to me is one of the pillars of wealth.
Absolutely. I couldn't agree with you more. Okay, here's the next question for you. Imagine it's your last day on Earth. You can only preserve 3 items in your time capsule. What are those items and why?
Oh man. Okay, so
I know this one always gets people.
Yeah, the first one would probably be the first thing would probably be a lot of my business journals. And this, for me, these are kind of brain dumps for me. I typically go through one of these moleskins once a year. And so maybe if I had enough good years, my daughter could see, just kind of look back and say, hey, what was going on with dad in January of 2023? What was he doing at work? What was he doing in business life? Because I just kind of put it all in there. I'll put in my personal list, my work to-do list, what I'm thinking about, and so that would be kind of the analog version. The second thing would be the digital version of that, which is, you're gonna laugh at this, but I brain dump a lot into ChatGPT, and so sometimes if I'm going out on I know, and so it's pretty funny. Like I'll tell you, sometimes I'll go out on a run and I'll just put my AirPods in, and you can talk back and forth to it, right? And it just archives everything. So it's funny. As you brain dump into it over time, its context gets better and better and better. And so over time too, you can ask it some really interesting questions. So you're gonna laugh here. Just a few nights ago, I asked it. I said, here it is. Tell me an uncomfortable truth based on all the information I've provided above. Keep it honest and unfiltered, something you think I need to hear to grow. And it says, based on all the previous data you shared, here's an uncomfortable truth I think you need to hear. You're risking burnout and stagnation by clinging on too tightly over control on Crown Capital resources, even as you chase autonomy.
This is honest truth because you were just speaking on this earlier.
I know. It's so funny. And so it gives me a whole paragraph, and the context is exactly right. And I just had to laugh. I was like, man, that is kind of the honest truth and what I needed to hear. So maybe the second item would be a USB full of all my ChatGPT stuff. And then I think the third would probably be, I'm going digital again, but probably a USB of just my entire photo reel for my daughters. I mean, these photos, as you can imagine, they span from when I first met their mom to their births to their birthdays and all of the above. So that would probably be number 3. They could always kind of look back and have that digital
priceless
album.
Yeah, priceless photos. Absolutely. Last question for you. What is your definition of a real estate rock star?
Yeah. I think that real estate is one of the most incredible avenues that you can use as a medium to pursue what you think what your definition of wealth is. And generally speaking, people's definition of wealth, the lazy answer is money. And the reality is that's really never the true answer. For me, wealth is being able to do what I want to do when I want to do it with the people who I want to do it with.
Yep. The freedom. Right.
The freedom aspect is. And so, a real estate rock star to me is somebody who has leveraged real estate as an incredible industry to pursue their version of what a wealthy life is. And the great thing about real estate is it's a massive spectrum. I mean, you could be successful and have a rental portfolio. You can be successful and be a wholesaler. You can be successful and just go inspect houses. I mean, I know a guy who's a retired guy. He goes and inspects one house a day, and guess what? He makes like $150,000 a year. Like, it's great.
Wow, he's charging a lot then.
well, but you look at the numbers and you'd say, well, if you charge close to $1,000, right?
You do
and you do one a day, yeah, and you do 100 a year, like that's $100,000.
Yeah.
And so, and his whole thing is he's a retired guy. He doesn't want to work a lot. So it's like, man, that he's a real estate rock star.
Sure.
Because he's found his version of wealth and through real estate. So yeah, I would say, if you're starting in this journey, don't be afraid to try something out, see if you like it, see if you have a passion for it. And if you don't, that's okay. Pivot. I pivoted 5 different times before I found lending. And I initially thought, like, my goal is to build a residential real estate portfolio, single family homes, collect that rental income. And I wanted to get to 50 homes.
Mm-hmm.
And I got to 5 and realized, like, I just flat out don't like this. This is it's terrible, And so, and that's okay. I was able to make the pivot, and then I tried several other things. And so that's what I would say. Like, you got to find where your passion lies and just use real estate as a medium to pursue, what your idea of like a great, perfect lifestyle is.
I love that, David. And David, just as people are, listening to this podcast, I'm sure they're going to want to reach out and probably have questions or, want to pick your brain. How can they find best connect with you?
Sure thing. Yeah. So my email is david@crowncapitalresources.com. That's my personal work email address. And so I would welcome anybody who wants to call and ask about lending or ask about any clarification on the podcast. Please feel free to email me, and I'm happy to reach out and jump on a phone call. I've gotten some really good connections from some of the podcasts I've done in the past, and I've always enjoyed people reaching out to me. So that would be great. Our website is crowncapitalresources.com. But yeah, from a direct basis, just email me. I'd love to connect.
Great. David, thank you so much for your time today, your wisdom, your stories. I know our listeners are going to love it. And tune in next Wednesday at 10 a.m. Central for another episode of the Real Estate Rockstars.
Thanks, Justin.